Man, I need to call y'all, bro. I need to call y'all. If y'all don't have my number, is that right? That's my number. Text me, call me, bro. Cause I be wanting to talk to y'all. I be wanting to talk to y'all before the training, and then it come time for the training to come on, and then yeah. So yeah, make sure everything right. Cool. We're gonna get to it. Today we got MT4. So as you know, a lot of people have been turning up on this FRX bag, bro. I'm not even gonna front. A lot of people have been turning up on this HFX and this DCX bag. And I commend y'all on that because that's where it all started. That's where it all started. Me personally, I wasn't one of those individuals that was the only thing accessible to me, but that's where it all started as it pertains to where I started trading, where my growth came from in trading was FRX and DCX. That's just where it was. You didn't come into the business. You didn't have oh we're gonna start out HFX. Okay, you're gonna get your bread on HFX. You're gonna fund up FRX. Cool, you funded up FRX. You got we didn't have none of that. You was like you traded FRX till you had enough money to trade DCX. That's exactly how you did it. Hey, what's up, Alvin? Yes, sir. That's exactly how it went. You traded FRX till you had enough bread to trade DCX. And once you started DCX, like you rinse and repeat. Rinse and repeat. So today we're gonna go over how we trade FRX, DCX. Now, whether that be long term, medium term, long term, it's up to you. We're gonna go over all of that information. So give me 45 minutes to an hour. I'll be out your hair. And I'm not gonna drag on the training because we don't got time for all that. We don't got time for all that dragging training. So there are a couple things that you need to know before we go into MT4. So we're gonna go ahead and we're gonna get right to it. If I'm lagging at any point, let me know because I can switch up the connection and then we can roll from there. So we're gonna go ahead. We're gonna pull out the whiteboard. So a couple things that you need to know. All right. So in MT4, one, okay. Let me see if y'all know. Let me see if y'all know. All right, there are 19 people on this call. When I say type in the chat, only type it once. All right? Only type it once. So out of the 19 people on the call, drop a number one if you know about the session times. Only if you know about it. Okay. That's one thing you don't got to do on my call. So on my calls, if you do not know what we're talking about, say that so I can go over it. Don't drop a one because I said drop a one and everybody's dropping one. If you don't get it, say that. So that way everybody's on the same page. I don't skip over no information. And let's say that it's one of those rare cases. My number's out there. Text me, call me, DM me, whatever. We'll get you set up. All right. So look like y'all know about the session times. So what we about to go over is something that is not subjective. So we're gonna go over pending orders. Pending orders. I'm gonna pending orders. So really and truly, I'm gonna do this. I'm gonna say ways to enter the market. So there are 5 ways to enter. Boom. There are 5 ways to enter the market. There's market instant execution, which is basically we're gonna say put me in, coach. Put me in right now. You need me right now. So put me in. That's what that means. Market instant execution. Put me in the trade right now. Now, then you got pending orders. All right. So you have the buys, you have the sells. You have the buy. Let me put some space. Buy, limit, buy, stop. Shout out to Dominique. She went over this too. Sell limit, sell stop. All right. So pending orders is, what's a catchy phrase? Yo, Jahidi, I know you're good at coming up with stuff like this. You came up with the last one. But anybody else that knows something about pending orders, what's a good catchphrase that I could use for pending orders? Because usually I just say not now, but later. Hold my trade. No. No. that broker gonna hold your trade. You ain't gonna get it back. Not now. That's gonna be y'all's chat box homework. I'm gonna continue doing this. So not now, but later. So that's what pending orders are gonna do. Let me bring this over here, straighten this up. All right, so we're gonna go over what they look like. I'll do it like this. I don't know about y'all, but sometimes like I be getting, no, I need this one. Like when this line don't be straight, it be bothering me. Hold up. All right, that's what I have to do. I like it. I like it. I'll be back. I'll be back. I can add some on top of that. I'm a multi-think. I'm a multitasking on that because I like it. All right. Slow down. Ooh, I know. Right here. Pending orders are baseball trades. There it is. Pending orders are baseball trades. And basically what a baseball trade is, and what I mean by that, I'm gonna explain it. So, when the pitcher throws the ball, the ball just you don't go to the ball. The ball comes to you. And that's what a pending order is. It's just like you're letting the trade come to you instead of you going to the trade. Yeah, okay. That works out. Y'all like that? Drop a one if y'all like that. Let me know. Hey, some more people showed up on the call. Let's get it. Let's get it. Ooh, Dr. Chris. Shout out to Dr. Crystal. Who's Dr. Crystal? I want to know. Marquis says, hey. I said, hey. I remember when you was on the op call. You was on the op call that I did. All right, cool. But yeah, congrats and welcome to the call. Welcome to Elevation Empire. Oh, okay. Okay. You got a very intellectual son. I can tell you that. You got a very intellectual son. I commend both of you. Let me see. We'll go black right here. Mind me while I draw the diagram. All right. I'm excited for his call tonight too. All right. So here's what pending orders are. And I'm gonna give you the whole diagram right here. So this is gonna be the limit. Stop. So limit. So stop. All right. So here's what they do. And this is gonna be kind of important because you can read what your buy limits, your limits and your stops are gonna do from MT4. And it's you kind of have to know what they look like. So where's my marker? All right. So I'm gonna do this in green. So a buy limit. So whenever you see a limit, think of that as the market's limit. So think of it like it's gonna be either a high point or a low point. So buy limit. A buy limit is when the market comes down and then boom, that's the market's limit, it shoots back. Sell limit. Market is buying up. Oh, look, it's that limit right there. Boom. And it shoots back. But notice there's always a reversal. So you can say limit reversal. You can say it like that. And a good way to remember it is that if you have a buy limit right here, it always starts out doing the opposite of what it says. So buy limit, boom, you got a buy limit, it buys, but it starts off selling. Same over here. You have a sell limit, but it starts out buying. So you can kind of think of it like that. You could think of it like that, or you could think of it like, okay, buy limit. So you can say, okay, buy reversal. So boom, you're looking for a reversal for a buy. A reversal for a buy starts off as a sell. Look right here, sell limit. Okay, sell reversal. That means that it's going to reverse into a sell. A reverse into a sell starts off as a buy. So you can kind of think of it like that. Now, stops, don't stop. So whenever you see a stop, think of it as continuous. So I'm buying continuously, which means like this. Same thing, vice versa with sales. Boom. You're selling continuously. Okay, so you can focus on the road. I'll send you the recording later. I don't need you. I don't need you getting hurt because you trying to pay attention to this call here. Not on my watch. I'll send you the recording. Yeah, or do what you gotta do. But that's basically all it is. Buy stop, sell stop is just continuous. It's just a level at which you're gonna start that sell. So look, buy stop right here. Market is buying. You're not looking for any reversals or anything. It's just that I want my buy to start up here instead of down here. So it just basically tells the market, okay, or it tells the broker, when a market comes up here, put me in for a buy. That's what a buy stop is. Same thing for a sell. Look, boom. I don't want to be putting in right here. I want to stay right here. So when the market comes down here, boom, sell. Same thing, not the same thing, but same concept for the limits. For the limits, cool. You come down, once the market reverses, put me in at this particular point. Same, vice versa for the sell. Once it buys up to this point and it reverses at that point, put me in. That's why I call it baseball trades, because in all of these scenarios, you are not going to the trade. The pitcher always knows the ball is going to come, but he does not go to the ball because that's not his job. The ball comes to the hitter, not the pitcher. The hitter, the batter. That's the name of it, the batter. So the batter doesn't go to the ball goes to the batter. And the same thing right here. Buy limit, you're not going to this trade. You're not waiting for it to reverse and putting an instant execution right here. No, you putting this in advance. You may see this trade. You may see this trade way up here. But you say, okay, I'm going to let it come to me. Same thing right here. You may see this trade way down here. But you say, okay, I'm going to let it come up to me. Same right here. You can see this trade way on the other side. Boom. Once it gets here, that's a confirmation for me. I'm going to wait for it to get to where I am. You're more of a confident trader when you let the market come to you. And that's why I prefer pending orders over instant executions, because pending orders are kind of like a win-win. And I'm going to show you why. Because sometimes this happens. Let's say my pending order was up here. And I say, okay, I'm going to put a buy limit right here. Boom. But look, the market never reversed. So the broker is not going to enter you into that trade. So look, it did reverse down here. But look at what would have happened if you would have put an instant execution right there. Oh, I think the market is going to reverse right here. I put an instant execution, stop loss. Opposed to, okay, I think the market is going to reverse right here. I'm going to put a buy limit. It never reversed. So it never entered you into the trade. So it's a win-win. If it activates, it activates. But if it doesn't count against you. Opposed to an instant execution, it activates automatically. So if that trade hits stop loss, it counts against you. Opposed to this, boom, it's way up here. It never activated. So guess what? It can go down 1,000 pips. But that trade will not activate until it reverses to this point. So it's kind of like an extra layer of protection for you. That's why I prefer it. Now, stops are a little bit different because they're not reversals. So let's say this rarely happens, but let's say that it does. Let's say instead of it continuing, it turns around like a sell limit, basically. It won't enter you into that trade because it didn't continue. Same down here. That's why if I'm using a pending order, I don't typically use stops. I'd use limits. If I'm doing a stop, I might as well just do an instant execution because it really doesn't make any difference. Only difference is time, basically. So if you understand what pending orders are, I want you to go ahead and type a 5 in the chat box. I'm missing 10 fives, 9, 8, 7. If I come in here and see it twice, bro, all right, we good. But yeah, that is what a pending order is. So, am I cool now? Okay, talked about pending orders. They know about session times. We're good. All right, so I'm gonna log on. I'm I'm gonna log on and we're gonna get rolling. Switcher, what's up, bro? This meeting is being, bro, Zoom. Zoom is crazy, bro. All right, no audio, no video. All right. I'm gonna put this in the chat just for extra precautions. I'm gonna put this right there. Oh, that's not accurate. Never mind. Let me put this right here. Boom. All right, that's accurate. See, I can come back and look at it. Cool. Now that this is in the chat, y'all good. All right, logged on. My co-host, recording. So now we're gonna go into MT4. 40 minutes. I'm good on time. All right. Yes. Stop share. All right. Y'all see? Drop a 1 if y'all can see the MT4. Or if you can see a collection of numbers and letters. All right. So this is MT4. Now, when you first download it, it may look like this. Trust me. Simple is not simple. Simple is actually hard because it doesn't tell you all the information that you need to. You would have to, do a bunch of other stuff, and you don't really want to do that. So what I want you to do is I want you to slide this over to advanced. You're not gonna need all this extra information, but you will need some extra information that simple will not give you. That's a word for anything else. All right, so we're gonna get into it. How come AUD USD is always the first pair, bro? How come? All right. So we're gonna talk about AUD USD. We're gonna talk about. Hold up. Let me see what Jihadi talking about. That may be pertinent to this training. All right. Oh. Oh look. She got y'all hooked up. Bye y'all. Shout out to Jihadi. All right. I'm gonna put this in the other chat too. Wow. She got y'all hooked up. All right. Now we can go back to what it's talking about. Screen. Cool. All right. So back to AUD USD. So what you're gonna need from this information is just one thing. And that's the pair, and that's this little number right here. This little number right here is gonna tell you a lot. This spread. So the major difference between HFX brokers and FRX brokers is that HFX brokers are not commission based. So when you say that you robbing the banks, you also robbing the broker too, because the broker makes money by you losing money or by you keeping your money in the broker account. Opposed to you can have an FRX broker, you pay to get into every single trade you get in. Now, every trade has a certain rate at which you pay the broker. Now, that changes throughout the day. And it can also be described as spread. Now, spread is just the difference between what you're actually making minus what you pay the broker. Now, on this one, it says spread 16. That don't necessarily mean you paying the broker $16 or 16 cents. It's just the rate. If you ask me anything else outside of that, I wouldn't be able to tell you. All I know is that this number right here is determines, brokers and how they get paid and all of that. The higher the number is, the more you paying. The less this number is, the least you're paying. So just keep that in mind. For regular FRX pairs, anything under 40 is good. It's average. Anything above 40, you're either trading at the wrong time or the spread is way too high on your particular broker. So, with that being said, we can dive into the rest of it. All right. So as you can see, I have a little list. And with all of these, that spread is different. For AUD USD, it's 16, but for Euro USD, it's 10. That means that I'm going to pay the broker less on Euro USD than AUD USD. Now, should that deter you from trading AUD USD? Absolutely not. Because what you're going to be paying these people is pennies on the dollar. You can make $600 and only pay them 60 cents or a dollar. It really doesn't matter. It's never going to matter. Just to put it simply, what you pay them is not going to matter, but you need to be cognizant of the spreads and how they are. So if you're trading Euro USD, you're going to end up paying less. Now, maybe 10-15 cents, but who's concerned about 10-15 cents if you just made 600 from clicking a button? So that's what the spread is. Now, you notice there's a bunch of different stuff on here. Now it just so happens that Euro USD is just a regular Forex pair. But when you start talking about Forex crosses, that's a little bit different. So USD CAD, GBP USD, those are typically going to have the higher spreads because their pip count is different. So regular FRX pairs and Forex crosses, their pip count is different. If you know kind of what a concept of a pip count is, if you don't know the concept of a pip count, type of one in the chat so I know if I need to explain it. If you don't know, if you have no clue what I'm talking about a pip count. Are we good? Are we good? So basically it's just different. Maybe how do I want to explain this? I'll do it like this, okay? So let's take this for instance. This little black space. So let's say that the one I'm going to show you right now, and let's say it was Euro USD. Euro USD is just a regular pair. But let's say that this right here, if I measured the amount of pips in this area, boom, let's say that that is worth 30 pips. Now, for the same amount of space, for something like GBP USD, that may go from 30 pips to more like 50 or 60. That's the difference between a regular Forex pair and a Forex cross. And that is why the spreads are typically going to be higher because ultimately, like, you're getting paid more. Same thing goes for exotics. So EUR, CZK, like right here. I don't know what CZK is, but I know since the spread is 5,000, it has to be making some money. It has to. Just like gold, you have stuff that's like, 10, 20s, but gold, XAU USD, is in the 50s. And gold makes some money. Like if you know anything about gold, gold makes money. And for EUR CZK to be at 5,000, that tells me it's making money. That's Bitcoin numbers. So let's talk about how to add stuff to your quotes or this list. Let's talk about how to add stuff. Let's talk about how to remove stuff. So let's say that, let's say EUR CZK, I have never traded that at all. But let's say I want to get rid of it because I want to make room because I don't want my quotes to be, I don't want to have to scroll for it. What I want to do is I'll go to the pencil on the top left. Then I will just click on it, EURCZK. Then at the top right, it's a trash can. Just hit that, boom, it's gone. Now, you're going to hit the pencil again in order to get out of this. Boom, now it's back to normal. Now I have room for one more. Another pair that I like to trade is silver. So how do I add a pair? You just click the top right at the little plus sign. And it gives you a different, all these lists of stuff that you can trade, but I'll go over that in a second. Coincidentally, I already know what silver is, so I'll just look it up. But you also have a search bar. You can go in, XAG USD, then all you have to do is click the green box. You click the green box, it disappears. Guess where it's at the bottom of your quotes. So that is how you add and remove stuff from your quotes. All it is just, adding and subtracting from this list. But now let's talk about stuff you can trade. That's where the exciting stuff is because a lot of people don't know how much you can trade with MT4. Like it's honestly a lot. So let's talk about it. So you have exotics, indices, futures, stocks, FX crosses, energy, metal, and crypto. Now, there are going to be varying amounts of money you will need to have in your account for each one of these. I won't necessarily go over that on this call, but just be cognizant of what you're trading and how much money you have in your account. Excuse me. Because it makes no sense to trade Bitcoin, to trade Ethereum, to trade gold, silver, US 30, German 30 with $100 account. That doesn't make any sense. So just be cognizant of that. And let's go into it more. So exotics. Exotics are gonna be like, let me just explain so you have a better picture. So exotics. Now I did a call last week and I asked the question, I said, what is Forex? And somebody said the exchange of currencies. That's true. Now, what an exotic, and I'm gonna add something to that. Forex is the exchange of major currencies on a global system. Now, what an exotic is whenever a major pair is traded with a smaller currency or a more rare currency. So in this exotics, you're gonna find something like the peso, the krone, stuff like that. So look, you got the peso right here, EUR versus the peso. So people that travel from Europe to Mexico, it's right here. EUR CGK right here. Corona, European and the Corona. You got the Hong Kong dollar, Polish, Sweden, Turkish, South Africa, stuff like that. Stuff that you don't like. Most people don't even know Hong Kong had their own currency. Like, it's just stuff like that. People know about the peso, but not everybody know about the Hong Kong dollar. Like, or the zloty. What is a zloty? But Poland has their own thing going on. Turkish lira, they have their own thing going on. And all of the major currencies, whenever they're traded with, smaller countries or, something their currency, that's considered an exotic. And typically they make a little bit more money. So I know that USD, Mexican peso, makes a lot of money. because there are a lot of transactions that go on between Mexico and the United States as far as money is concerned. That's just like GBP USD. That's why it's considered a cross. Now, let's talk about that some more. No, we're going to go in order. Indices. So, indices, think of it like this. Think of it like this. You know how people say this is the big umbrella, this is the big picture. So all indices are big pictures of stocks. That's all they are. So US 30 is US 30 is like the big picture of the top US companies. Same with SPX 500. SPX 500 is, a collection of the top Fortune 500 companies. And, everything US related falls under, US 30 and SPX 500. Like if you ever traded XPX and NAS, they move the same. Why is that? Because they trade the same stuff. It's a collection of the same stuff. It's just a collection of all the companies. That's why US 30 moves so fast. Because if you think about it, the United States companies make a lot more money than everybody else. So the index or indices are going to move a lot faster. And the more, the same thing goes for other countries. So their top companies are going to show up here. So Japan 225. So the top 225 companies from Japan are going to show up in Japan 225. Same thing, German 30. Same thing with all these other ones. That's just why they move so fast. Just not pertinent to MT4, but just good things to know. Futures. You probably would never trade this. I wouldn't. There's no point in trading it. I mean, you could, but that's kind of advanced and it takes too much work to understand. Like if you trade Bitcoin, you could trade the this right here, the United States dollar. You could trade that because they're opposites. Whenever Bitcoin goes up, the dollar goes down. Whenever the dollar goes up, Bitcoin goes down. They play off of each other. All right, stocks. Now, if you invest in stocks and you want to, liquefy your money a little bit more or see some money right now without your stock having to mature, I would highly suggest trading it on MT4 because you're looking at the same thing. It's just working on two different types of systems. So the stock system, you have to allow time for it to mature, have it, increase in value, opposed to, let's look, you go into Apple stock and you can trade it. Like like the stockbroker looks at this and it'll look at this and you'll only make $100. Opposed to you do this on MT4. Where's that tool where you can see the I don't even feel like looking at it. I'll show you later. But that tool, like they look at that and you only make $100. If you look at that on MT4, you up some bread. You are up bread because the forex system is so much. What's the word I'm looking for? It's much more liquid than the stock system. So if you're invested in stocks and you want to, diversify a little bit and invest in your favorite companies, you can. This is a big one. There's a difference between investing and trading. There's a big difference between investing and trading. You go to the stock market to invest. But if you want to trade, come to MT4. You can invest and trade at the same time, but it's always going to be on two different platforms. It cut off. Hold on. So check me out. If let's say that me myself included, like I don't have a bunch of money to really be investing in these companies that I want to invest in. Like you want to invest in companies that's going to make you some money, like Hilton, Apple, JP Morgan Chase, all of these companies that are making money, not little baby companies where you just throw in here and there. Oh, so if you missed out on some of those opportunities, come trade it here. It's better. Like look, Facebook. Everybody can't invest in Facebook, but everybody can trade it. FedEx, look at that. Chevron, Cisco Systems, Citigroup, BBVA Compass, Boeing, Amazon. Look, Amazon is $1 trillion company. You think it's going to be making some moves? I look at it. Hold on, let me get rid of this. Amazon is $1 trillion company. And look at all of this. All of these opportunities, or you could have came in and made some money just because of what you knew. Now, we got to speed it up because we're getting kind of low on time. So, FX crosses, we kind of talked about that. Is more major countries. So, when a major when a major country trades with another major country, that's kind of like a cross, to be honest with you. Or like when a major country, and don't think of these as like minor countries or anything, just ones that we know of but are not superpowers. Think of it like that. So you have your superpowers; those are going to be your main forex pairs. But forex crosses are going to be when a superpower, trades with something a little bit less known. So like GBP, AUD, GBP CAD, GBP JPY. This is a superpower. Great Britain superpower with Canada. Canada isn't necessarily a superpower. Or Japan. Japan isn't necessarily a superpower. That's why these are crosses, and that's why they make more money. So, energies. I personally have never traded UK oil, but I have traded US oil. So that's something to get into. After you get into metals, but you feel like you need to build your account more to trade indices, trade oil. It's a good in between. All right, metals, gold, silver, platinum. So we already have silver and gold versus the United States dollar. The only thing we don't have is platinum versus the US dollar. I don't really trade platinum. I don't see a reason why you shouldn't. It's just I just don't. Cryptos. We know about cryptos already. There's crazy amounts of crypto. But yeah, that's pretty much it. You could trade a lot with MT4. You can trade a lot with MT4. It's just a matter of knowing what there is out there to trade. Now let's go into AUD USD. So when you click a pair, you come up with 3 options. Trade chart details. Details you really don't need to concern yourself with. But really there's only one thing you should concern yourself with on details, and that's down here. So just know, and it's not going to be a major thing either. It's not really going to matter. But just so there are no surprises, let's say that you get into a trade and the market closes. Let's say It's Friday morning, you get into a trade. Then 4 o'clock hits, the market closes. And you hold the trade over the weekend. They're either going to charge you or they are going to uh, pay you for holding your trade over for the weekend. How you find out if you're going to pay or be charged is in the details. So you go to details. If they're both negative, then they're going to charge you. And if they're not, they're going to pay you. So if you see like a 3 cent, 5 cent, 10 cent deduction, that's what that is. But if you see that they paid you a few cents, that's what that is too. So let's talk about the rest of it. So you have trade and chart. So trade obviously takes you to the trade screen. Chart takes you to the chart screen, or you can kind of see hand in hand what's really going on here. You can see it. You know, if you're in a position, you can see. I'll show you all that in a minute. But let me go back. So you could trade from off of this screen, and you can trade off the chart screen. So you click it, trade. It's going to take you to the trade screen, or you can come back, press chart, and then at the top right you have trade two, and it'll take you to the same screen. So is this making sense so far? This is making sense. Drop a 5 in the chat box. All right, let's get it. So let's talk a little bit more about your trade screen. So your trade screen. All right, let me figure this out. So your trade screen is gonna look like this. Where it says market execution, that's where you're gonna switch up, how you enter the market. All you gotta do is just tap on it, and then all the other options come up. You can hit whatever you want, but when you put a pending order, you have to put a price, so it's gonna look a little bit different. So market execution, all you need is your stop loss, take profit. To be honest with you, you don't even need that. But in order to trade, you do need a stop loss and a take profit. But it's not necessary on MT4. So if I do a pending order, it changes a little bit. You got to put a price, stop loss, take profit. And one thing about MT4, it does not let you get the numbers wrong. So the numbers have to make sense. So if I put price at 1, 2, 3, 4, 5, and my stop loss is at 1, 2, 3, 4, 5, my take profit is at 1, 2, 3, 4, 5, it won't let me enter. But if my price is at 1, 2, 3, 4, 5, but my take profit is 1, 2, 3, 4, 3, and I'm on a sell limit, it won't let me put it in because the numbers are wrong. That's another reason why I use pending orders. Now expiration, that just means because like I said, that trade is still going to register, but it's not going to be active. And basically what an expiration is it's just saying like, if this trade doesn't activate by the end of the day, delete it. That's basically what this is. Thank you. Hey, wait. So that's basically what that is. If this, I'll show it to you. I don't use expiration. I'll just go in and delete it because there's no telling if it can do what it's doing, then come back and activate. But what you don't want is you don't want for the market to be making a completely different move and it activates your trade in the wrong direction. So I try to go in and do that before that happens. That makes sense. All right. So next thing we're going to talk about is your lot size. So your lot size is, You can adjust it with the directions that are right here. So you can increase it or decrease it by a micro or a mini. So 0.01 or 0.1, you can increase it or decrease it. Just make sure you're using proper risk management when you go ahead and you place those trades. So for instance, I'm gonna go ahead and I'm gonna place this. Market. See, look, it won't let you put it in because market is closed. But I'm gonna put. Oh, I think you can trade this too. Ah, oh, I forgot. Stock market is 8 to 5. Ooh, that's another thing. If you're gonna trade stocks, you have to trade at the stock schedule. That's the only thing that sucks about it. So you can trade stocks with a different system, but not at a different time. That's what sucks. So Forex, you could trade 24/5, but Forex, you can only trade from stocks, you can only trade 8 to 5 Monday through Friday. So that's one thing that sucks. All right. So let's go back into, let's just get a crypto, bro. BTC, BTC. Trade. I'm gonna buy it, and then I'm going to place a buy limit. So this is your active trade screen. So your active trade screen is going to show you your active trades and your non-active trades. So where it says positions, that is going to show you your active trades. So what you're in right now, what you're making. Your orders is what's, it's kind of like what orders are, you know, nah, I'm not going to use that. That's kind of confusing. But orders are just going to be your pending orders, basically. Trades that you have ordered but are not active. And you can delete these at any time. And they don't count against you until they're active. So you're looking at this Bitcoin trade. I just kind of went in and just put anything. But if you click on it, like just tap on it, you can see it says charges. Charges are 0.05. So 5 cents. You pay the broker to be in this trade. And that's the difference between the top number and the little side number is going to be the charges. Now, if you hold this, let's say you hold this until like next Monday, you may see under swap, you may see that number change from 0 to plus whatever or minus whatever. Whatever that is just depending on whether they pay you or charge you for being in that trade. More than likely for Bitcoin, they're going to pay you. I know sometimes they'll pay you to take it over the weekend. Sometimes they'll charge you. Just depends. So next we're going to talk about this little top piece. So balance, self-explanatory. How much money you have in your account. Now, your equity. Your equity is how much you have in your account minus your active trades. So whatever your active trade is, it is going to add or subtract that number from your balance. Margin, uh, I'm still kind of impartial about margin, but what I do know is that since I didn't put, it's a little weird because I didn't put a stop loss or anything. All that's there is spreads. So the only thing that's really in these numbers is spreads. But if you put a stop loss in there, what it'll do is it'll add up how much money you're risking and put that in your margin. So that's basically how that works. Uh, Now you typically won't worry about getting margined out until you have over $1,000 account. If you have over $1,000 account and you just let your trade run, you could be margined out. And what that means is just like you're risking way too much money way too soon. It's basically all it means. And once you get margined out, it's just like they're not going to let you trade anymore because you could literally lose your account. Or let's say that you do continue once it says okay you're being margined out. Not only will you lose your money, but you may end up having to pay the broker money, depending on how much you lost versus how much you had in your account. If you have $1,500 in your account, you enter a US 30 and you fall asleep, you forget all about it. You forget all about it, and hold up. When you say margin out, is that like margin call? I don't know what a margin call is, but when I'm saying like margin out, that means like the amount that you're in the hole for and the amount in your account is getting way too low. So they're gonna kick you out of trade. However, let's say you have $1,500 in your account. And this depends on this is kind of off topic, but this is all dependent on uh your leverage. So if you have a 500 leverage, they're gonna pretty much let you do whatever. But if you have a 300 leverage, your money is not really worth the same as a 500 leverage. So let's say you have $1,500 in your account and you're in a hole for 1,400, like you're down $1,400 with a $1,500 account, you may be margined out. Or let's say you have $1,500 in your account and you in a hole for 1,600, you close that trade, you're gonna owe the broker $100. But y'all won't necessarily have to worry about that right now. So just use proper risk management and you'll be fine. I personally have never seen anybody get margined out or have to pay the broker. I just know that if you let it get out of hand, that's exactly what'll happen. So as you can see, this trade activated now. Are you saying margin out is all right? Definitely happened to me before. Tahiti is risky, bro. Tahiti is very risky. So, you know, so on these, I'm gonna go over the last bit uh, about your trade screen, but you noticed how it was kind of inactive. It was just sitting there on the screen until it became active. That is what a pending order is. I'm not home on the mouse. All right. So that's basically what happens. So let's talk about what you could do after a trade is active. So after a trade is, let me look at this so I can show y'all how to like close a profit. No, spoiler alert. Mm, yeah, this is definitely gonna show. So I'm gonna show you some green once this kind of goes away. But here's what you can do after your trades are active. So when you have an active position, you can click on it one time or press and hold it rather. And it gives you a couple options. You can close the trade, you can modify the trade, you can close again, or you can close by doing this. Look. Ooh, this is new. Oh, when they start doing this? I don't know what I just did. Wow, that was crazy. I think I know what I just did. Okay. So when you have multiple buys open, yeah, that's new. I've never seen that. That's crazy. Um, I like that a lot. That's crazy. Okay, but look, traditionally, this is what you would have had: close, modify, trade, chart. You can close the trade, you can modify the trade, you could trade the same pair, you can open up another position, or you can place another position, or you can look at the chart. So modifying the trade is this is how you what's the word I'm looking for? Modify your stop loss. Put your stop loss at break even or trail your stop loss. Now, listen closely. If you do not know what trail your stop loss is, or modifying your stop loss, or trailing your stop loss is, type a 1 in the chat if you do not know. Okay, okay, okay. All right. So we're gonna go do it like this. So this is what I mean by that. So trading forex is all about what you could do to protect your account, because ultimately it's your money, and in the beginning you're probably spending money that you need, and that's what you don't want to do. So it's all about what you could do to protect your account. So let's say that I have a position right here. Let's say this is my entry. Black line is my entry. Let's say I'm gonna color coordinate this how you would traditionally see it. Stop loss right here. Then you have your take profit up here somewhere. All right. Boom. Let's say it's like this. So traditionally, this is what it'll look like. Now, what you could do is you can move this up here. Now, what does that do? What is that called? That's called moving your stop loss to break even. And here's why that's so important. Because let's say the market is doing what it does. Boom. It's just doing whatever, boom. Comes down, but let's say it shoots back up, shooting up. Your stop loss protects you from losing a bunch of money, but your trade is way in profit. So what you could do, move your stop loss up here, buy out. So look what happens. Let's say the market shoots back down, hits your stop loss. What do you lose? The only thing you lose when you move your stop loss to break even is the amount the broker charged you to get into the trade. So let's say the broker charged you 15 cents. So instead of you losing $15, you lost 15 cents because you moved your stop loss to break even. Now, let's just say it just keeps going in profit. Let's say it just keeps going in profit. What you could do what's called trailing your stop loss. So trailing your stop loss is just chasing the market, basically. You could do it right here. Let's say the market just, it was way in profit and just, turns around, hit your stop loss. What do you lose? Nothing. You're actually gaining something. Let's look right here. This could be plus 5 pips. That could be plus 5 pips right there. So you made money by hitting your stop loss. Same thing can happen right up here. Yeah. So let's say you move your stop loss way up here, just so you can go. Let's say you're at work and you forget about it. You move your stop loss way up here. It's like, it don't matter if you hit stop loss or take profit. Either way, I'm making money. Because look at this. This could be plus 30 pips. That could be plus 30 pips. So the market can turn around and you made 30 pips. But look, let's say the market does hit take profit. Now, it's plus 60. But it's a win-win for you. So it don't matter if it hits stop loss or take profit, because if it hits stop loss, you made 30 pips. If it's take profit, you made 60. So it really don't matter. So it's all about break even and trailing your stop loss in profit. So that way, should the market turn around, you're protected. Now, you don't got to go and do this, but just give it a little bit of room. Now, how you do that is like this. You click and hold, you push modify, and it's going to allow you to move your original stop loss and put a new number in there. And what you want to do is you want to take the number, the same number as your entry, you want to put it as your stop loss. How you do that is this number on the left. This number on the left right here is where you enter that. At 41650.13, that's where you enter that. Or you can do this. You can come down, click and hold, press chart, and then you can look at where it says sell. Where it says sell, it has a number right by it, 4165020. And guess what? You can take that number, push modify, and put that number in there for stop loss, and it's going to move your stop loss to the same point as your entry. Now, you repeat that process for trailing your stop loss. Let's say I want to have my stop loss somewhere up here. Let's say 4180194. You just take that number, push modify, and then put the new number in there. You can also do the same thing for your take profit. Let's say your trade is about to hit take profit. You think it's good. Okay. Let's say market is getting ready to move some more, but it's about to hit your take profit. You can move that take profit further down. So that way you can capitalize on that extra money, because as soon as it hits take profit, it's taking you out. So you can capitalize on the extra money. But somebody said, Jihadi said, how do I personally decide that? I don't. I just pick a number, to be honest. I just pick a number. So I'll go to the chart and I'll zoom it out and I'll say, I'll just say, you know what? Boom. 41873. Cool. I'm cool with that. Or I'll go to trading view and I'll just find a point of market structure. I'll just put it right there. I'll probably tag that in at the end of the call. I know that's not for everybody. But yeah. Next thing we'll talk about trading When you hit trade, it's just telling you that you can open up another trade of the same pair from this screen. So you can pretty much trade on every single, on the first three like little things. On quotes, chart, and trade, you can place a trade off of those. Let's talk about closing. Closing, it just means that, you know, you can either close fully or you can close partially. And you notice that this kind of looks like the trade screen. And that's true. The only difference is that you cannot move your stop loss or take profit from your screen. You can only move your lot size, and there's a purpose for that. So the trade as it is right now is open for 0.09. Now, let's say that I wanted to close 0.3. I want to get 0.03 worth of profit. So what I want to do is I want to deduct from this until I see the amount that I want to close. Because that's how it works. This is not oh, I want to close out, oh, I want to be left with 0.06. So I'm going to deduct till I get to 0.06. No. If you see 0.06 right here, that means you are closing that amount. So just like right here, 0.03, that means I am closing 0.03 off of a 0.09 trade. So I'm going to be left with a 0.06. So let's say that I close this 0.03 right now. I'm going to be in this trade for 0.06. Same thing is if I was to close it, let's say I want to close half of this position. Half of a 0.06 is a 0.03. So when I close this, I'm going to be left with a 0.03. So you kind of see how it works. So remember, if it's blue, it's on you. So you can determine whether you want to close all of it or close it in close partials. Now there are some strategies where I would recommend closing partials just for the sake of it, but other than that, that's pretty much it. Then you have your history screen. Your history screen just shows you, you know, what everything looks like, what you made, what you lost in an itemized form. You can do it from the day, the week, the month, or let's say you want to see how much you won, how much you lost in a 6-month time frame. You could go to custom, and then you could choose dates. Settings, only thing you really need from there is opening a demo account in charts. So you can actually like customize your charts. Now that's subjective. I don't really care because at the end of the day, like this is just how I place my trades. I don't really care how it looks. Some people trade from MT4, so they want to make it look more appealing. But me personally, I don't care. I just show y'all just in case you do care. So you just go to colors. Uh, you can kind of play around with it to see which one. This is how I learned. So you can kind of play around with it to see which one is which. So foreground, grid, bar up, so on and so forth. So MT4 comes with a grid. I don't like grids at all. It takes away my visibility. So I'm gonna show you right there. You see that? I don't like that whatsoever. I don't. It looks tacky. But that's why I either make it the same color as my background, or I make it, you know, where it's a little bit distinctive, but not really. So like right here. See that? It's kind of distinctive, but not really. But if I really, really, really want to, you know, just get rid of it, I'll make it the same color or darker. So like that. So where you can barely see it. Yeah, that's how I do that. Bar up, bar down. Because what you could do is you could you could change what the candle itself looks like, and you can change the border of the candle. So bar up will be what the candle looks like. Well, no, I'll just show you. So bull up, let's just say I make that orange. Now bar up is just a buy candle or the wick, basically. See that? So now I know that bar up just means the wick. Look, we're in profit, or it should be. And see, this is what I was talking about with spreads. So look, the gray line is where the market actually is. The red line is where the broker puts you. So you can see that the market was in profit, but on here it wasn't in profit. So just keep that in mind. That's not normal. All right. So I'm gonna change this back to blue. So now we know that bar up is the wick. And then bull candle, that's the candle itself. In Forex, when you hear bull or bullish, it just means buy. When you hear uh, bear or bearish, then that means sell. So see, look, bar up, it's buy. And I'd say just play around with it. I'm not gonna tell you what to do or not to do. And then you can change the outline of it too. Because one time I had like a blue candle with a red outline. It looked kind of cool. But I just like this. It goes together, I guess. But I don't really care. But I would say just go in there, play around with it, see what you like, and then just go from there. But ultimately, that's MT4. Like it's I didn't really want to take too much time with it, but that's ultimately what MT4 is all about. Like just get in there, take your trades, get your money, and dip. That's like going to a party you really don't want to be at. You just go in there, show your face, and dip. Oh man. Oh, I am tired, bro. Let me go ahead and stop this.